February heading through the early afternoon on Wall Street. I'm Grant Mercer with your Storm Stock Solutions intraday update, bringing a little clarity through the chaos of today's tape. The market's tone this hour is all about mega-cap tech and the broader AI complex trying to reassert leadership, even as some underlying consumer signals look a bit shakier beneath the surface. What's really changed since the last check-in is a sharp focus on two giants, Nvidia and Alphabet. According to reporting from MarketWatch, one prominent analyst is out calling Nvidia unusually cheap relative to the broader chip sector, noting that over the past decade the stock has rarely traded at these kinds of valuations versus its peers. That kind of language is catnip for momentum traders who've been waiting for a reset in AI leaders. You're seeing the debate shift from "has AI peaked" to "is this a reload zone?" as pros watch how Nvidia trades into the close. At the same time, Alphabet just picked up a different kind of tailwind. MarketWatch highlights that on the prediction platform Polymarket, odds that Alphabet will be the world's largest company by the end of next year are now nearly neck and neck with Nvidia's. That doesn't move earnings or cash flow directly, but it does tell you where speculative sentiment is drifting. Traders watch those prediction markets as a real-time barometer of where the crowd thinks long-term leadership could land in big tech. On the risk side, there's a quieter but important story about the U.S. consumer. Data flagged by MarketWatch show consumer sentiment sitting near record lows as 2025 winds down, even though spending habits haven't rolled over in the same way. That miserable but still spending dynamic is an area to handle with care. If the mood eventually catches up with wallets, consumer discretionary names could see more pressure. If spending keeps holding up, this ends up as one more wall of worry the market climbs. In the background, there are a few under-the-radar themes on my watch list. One MarketWatch roundup is making the case for another strong year for emerging market stocks, tucked inside a broader piece about giving money to children earlier, rather than waiting for an inheritance. That emerging markets angle isn't moving the tape intraday, but it's the kind of asset allocation story that can build quietly and then matter in the new year if capital starts rotating abroad. We're also seeing a cluster of year-end personal finance angles come into focus. Strategies to lower your 2025 tax bill and potentially boost refunds, and smarter ways to spread charitable donations across the year instead of cramming them in by December 31. Those aren't day trading catalysts, but they sit right at the intersection of markets, policy, and household balance sheets, and they can influence how much cash ultimately finds its way into risk assets over time. Into the next hour, I'll be watching whether this bullish chatter around Nvidia spills over into the broader chip complex, and whether the Alphabet prediction market buzz translates into sustained buying in the big internet and AI platform names. I'm also keeping an eye on any fresh consumer or policy headlines that might either confirm or challenge that sour mood solid spending narrative. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Storm Stock Solutions, I'm Grant Mercer. Stay sharp, stay steady.